In most transactions, the interest rate is not the most important number. Now, I know a lot of you are just, what is he talking about? But I'm going to tell you 5 numbers in a transaction that more often than not actually carry more weight than the interest rate alone. But first, if you're looking for more content on mortgage loans or home buying in general, please subscribe to my channel and check out my other videos. As a society, we are just led to believe through countless marketing and articles and news reports that your mortgage loan lives and dies by the interest rate alone. And because of that, a lot of borrowers will go into a transaction wanting to talk about and look at nothing but the interest rate. But here's the thing. There's other variables that will have a greater impact on your affordability and your finances than the interest rate alone. And in fact, if you are so locked in on the interest rate that you're not looking at anything else, you actually set yourself up to be bamboozled. And when I get really wacky loan estimates that people send me from other lenders, when I start talking to this borrower, 9 times out of 10, they do fall into this category where the lender just promised a rate, wrote it down somewhere, the borrower just got all excited, never asked any other questions, never looked at anything else. And then a week later, they get their estimate and oh my God, look at all those crooked numbers. So don't be that person. Now, let's get into this. Okay, here are 5 numbers in a mortgage transaction that can often be far more important than the interest rate alone. Number 1 is the closing date. But how can this be more important than the interest rate? Well, number 1, it can actually affect your out-of-pocket numbers quite a bit. So the day of the month in which you close is how prepaid interest is calculated. So if you were to, for example, close on one of the last few days of the month, then you're just going to pay a few days of mortgage interest. But if you close on the 1st, you're paying 30 to 31 days of mortgage interest. And this is an out-of-pocket expense. It's part of your closing costs. And the difference between closing on the 30th versus the 1st, depending on the price point of the home or the total loan amount, it can be a few $1,000s out of pocket. That is a huge, huge swing dictated solely by which day you close. But we're going to go a little bit further as well, because we have to start looking at when that first payment is due. So more often than not, you are going to skip a month before the first payment is due. So for example, if you were to close on the 30th of March, you would skip April, and then you would pick up that payment on May 1st. So there's some strategy there of when you want to make that first payment. What some people will do is they will close towards the middle of a month. They'll skip the next month, and really about 6 weeks elapse before they have to make that first payment. This gives you a chance to maybe recoup some funds from closing or move things around or start a new job or really any number of things. Also, closing date is a strategic point of negotiation. So a lot of times, if there are multiple offers on a home, the team that can close it the fastest can win, because maybe that seller just needs to get out the door. Maybe they're under contract on a home in another state, what have you. So remember, closing date can affect a lot of different things. And in the current market, which is more of a buyer's market than we've seen in quite some time, a lot of buyers are negotiating closing dates that are further out, right? Because that's what meets their needs. And in that case, then you've got some runway for interest rates to evolve and hopefully get better before you actually lock one in. So that's number 1 for mortgages that can be more important than the interest rate alone, and that is the closing date. Now, the second number is one that is extremely prevalent in today's market, and that is seller incentives. And this is money that sellers provide to borrowers out of their net proceeds to help pay for closing costs, interest rate buy downs. If you're a VA buyer, you can use it to pay off a third-party debt. You can use it to pay off a lease termination. You can get cash back at closing. I mean, there's a lot that goes into this. And these seller concessions can be a big, big number. I have multiple contracts right now where the sellers are providing the buyers with $10,000 or more. What this means is you're, as a buyer, not really coming out of pocket at all. You can actually say, I bought this home for free, right? Or got into this home for free. And really, I mean, it's part of this market. It's up to your agent and you to have a good strategy and your agent to negotiate this as part of a deal. But it is absolutely possible for you to get 3%, 4%, 5% or more of the purchase price in seller incentives to help you get inside that home. Okay, the third item that can carry more weight than your interest rate alone is your escrow, meaning your property taxes and your homeowners insurance. Now, why does this carry more weight? Well, let's look at the facts here. On a home that is priced at $300,000, the difference between 5.5% and 5% is about 140-ish bucks, which isn't nothing, but I guarantee you when I let off, you probably thought it was going to be a bit more. Now, instead of just waiting for rates to get to 5% or spending thousands of dollars to buy down your rate to 5%, what you can do instead is, number one, shop in areas that have lower property taxes. You know, most cities have varying taxing districts where you can get a significant variation on property taxes. Also, if you're a veteran or you're an older person, or there's various other exemptions for property taxes that you can file for with your county and state and get some tax relief. And oftentimes, this is going to move the needle a lot more and a lot faster than trying to buy down the interest rate with points. Another one is homeowners insurance. Number one, you can select areas that tend to have lower rates. Example, if you buy a home in an area that does not require flood insurance or wind or things like that, it's going to be a cheaper rate. Also, if your home is relatively new, or at least the roof is a lot newer, your rate's going to be a lot lower. And again, like most things, you can shop around with homeowners insurance. There was one in Oklahoma a few months ago where the initial premium they got was $4,700 annual, which you can do the math. That's about $400 a month. Now, part of that, it's Oklahoma, right? Wind, tornadoes, all that. But we got this person shopping around and he ended up finding a premium for $2,900 a month. So we're talking about a $150 swing in their monthly payment just off of that alone, not to mention the savings in closing costs. So again, shop right with your taxes and insurance, and it can have a much faster effect than trying to buy down your interest rate. The fourth number that can have much greater effect than the interest rate alone is the value of home repairs. Yes, you are going to get that home inspected. Inspector is going to provide you with a nice fat report full of information, photographs, the good, the bad, the ugly, all of it. And that will initiate a period of time in which you can negotiate with that seller to have things repaired before you take occupancy. And again, in the current market, which is skewed more towards buyers than it has been in quite some time, I'm seeing some hefty repairs. A roof replacement, mold remediation, HVAC repairs, a deck reinforcement or replacement, flooring allowances. I mean, we're talking about items that would have cost the borrower thousands and thousands of dollars after the fact that they're getting the seller to handle. Now, let's go back to that example of, the difference between 5.5% and 5% at $300,000, a measly $140-ish a month. Now, juxtapose that against a $20,000 roof replacement, an $8,000 HVAC repair, a $5,000 mold remediation. There's no comparison, right? So the value of these home repairs oftentimes will very, very much outweigh the interest rate alone. All right, now we come to the final number that on its own will carry so much more weight than the interest rate. And unlike the first four, these numbers are actually tied into the interest rate. And it is points and fees. Now, really quick, points is the industry term for buying down your rate. One discount point equals 1% of the loan amount, which buys down the rate 0.25%. Okay, fees is in regards to lender fees, or basically charges that they pass on to the borrower. And you'll see this by a lot of different names. There's an admin fee, or a processing fee, an underwriting fee, Some banks will have an origination fee of like 1%, whatever that is. These numbers carry so much more importance than the interest rate because it's actually giving you the true context of the interest rate. If I get on the phone with you and I say, yep, I got you locked in at 5%, right? Great deal. You're so super happy. And then you get the cost estimate and I'm charging you an underwriting fee and a loan origination of 1%. Now, I didn't charge you points, like I said, but there is still a charge to that interest rate. Now, let's say you go down the road and somebody gives you a 5.2% for absolutely free. Which one do you think is better? Most people are going to take the slightly higher rate for absolutely free without all the charges. Maybe you even find 5% for absolutely free. The point is the interest rate alone is useless knowledge without understanding the context of the rate. And this right here is how buyers get themselves in trouble with lenders more than anything else, is they just stop the conversation at the rate and they never find out the context of the rate. But the context, the fees and the points are far more important because that's telling you how good or bad of a deal that rate really is. If you have any questions on loan breakdowns, interest rates, or items that are more important than your interest rate, please reach out. We'll set up a phone consult. We'll go over the particulars of your situation and figure out the best course of action.